My name's Shannon Trell. I'm a staff writer with Finder, and super excited to learn more about ArborCrowd.
Cool. Thanks for having me. And I'm excited to talk a little bit about what we do.
Awesome. So I guess to kind of start out, we'd love to hear kind of like your elevator pitch. What makes ArborCrowd different from the other real estate investing platforms?
Sure. So first and foremost, ArborCrowd was conceived as part of the Arbor family of companies. We are not an affiliate technically. What we do is we share the same leadership, and we're amongst a brand and group of companies. We call it the Arbor family of companies that shares that leadership from the publicly traded REIT we have a private equity shop in house to the crowdfunding platform and more. And essentially, what we do is we saw a lot of opportunity for a new class of investor that came about with the passage of the Jobs Act to invest in commercial real estate opportunities that were previously really held for people in the know and institutional investors. So, looking at the deals that we see come across our desk on a regular basis, we decided to open that up to this new class of investors to participate in those transactions all via the internet and the platform.
Okay, awesome. And are there any new ArborCrowd features that are currently in the works right now that might be released in the near future?
Sure. So something that we do that's a little bit different from a lot of our platforms, and I'll take a step back. We focus on multifamily assets across the United States, workforce housing in particular. And as we can all note, that's an asset class that traditionally performs very well in down cycles, downturns, and has performed better even with this COVID crisis in place, and comparatively to other asset classes. With that said, we are able to provide the capital for our transactions prior to syndicating them out to the crowd. So an affiliate literally invests into the transactions. So if one of those transactions doesn't sell, we still have that money in the deal. But otherwise, we take down the deal, we put our money where our mouth is, and we do so that we show we can be there at closing, and we can actually present the greatest amount of transparency, communication, and information to our investors because the transaction has closed and is working. And what that has done on a product level is given us the ability to warehouse deals. So in a time like this, deals that we were going to put onto the platform, originally, we basically pushed off, and took the time to see where and when the dust will settle and how. And with that, we will come back online with those products, with those deals, when we feel it is the right time to do so.
Okay, and as I understand it right now, ArborCrowd investments are currently limited to investors that have a minimum of $25,000 on hand. Do you see this minimum changing in the future, fluctuating, and why?
On a deal by deal basis, which is another way in which we operate, I do foresee that the minimum could change. A lot of the regulation that's in place right now, unfortunately, is outdated. And when I say outdated, it means it wasn't updated when the Jobs Act was created to allow for more opportunity. So there are limitations on how many investors you can have in certain types of transactions that are completely arbitrary. Something that I've been working closely to approach Congress and work with them to expand the definitions and decrease those limitations. So with those in place, we have to adjust our minimums to reflect those, arbitrary numbers, and allow for us to raise as much capital as possible.
Okay, definitely fair. And sort of building on that question, right now, ArborCrowd is really only open to accredited investors. Do you see that possibly changing? Do you see the platform opening up at any time to non-accredited investors?
I don't. We feel that the accredited investor class is one that is pretty active and knowledgeable in investments of the sort in general. And I think there's a tremendous amount of risk when you start bringing in investors. And right now, the only way you can bring in non-accredited investors is through the Reg A plus model, that fund model. And I see a lot of potential risk there in that you're selling to people as low as $1,000 or a $5,000 minimum who previously have very little experience in investing in commercial real estate at all. And you're asking them to invest in a fund structure that hasn't identified the deal. So it's basically a tear sheet that has some sort of general strategy laid out that potentially somebody got through by clicking on a Google advertisement, or a display ad or something of the likes. And you're asking them to invest. They have no prior experience. These are, complicated opportunities. The more transparency, the more information you can provide, the better. So I see a lot of potential risk there, and I don't think that it's the right direction to head into.
Okay. So one thing that I have noticed about ArborCrowd that sort of differentiates itself from other platforms is that it does only offer one deal at a time. Can you elaborate on the thought process behind this decision?
That is correct. Yes, absolutely. So we have a deal by deal model. That is a model that we chose, to go out with. And we feel that in operating at a one deal at a time place, we can provide the greatest amount of transparency and information, like I was saying earlier, into those deals. By closing on those deals and putting together the offering overviews and prospectuses, which we think are some of the most communicative and transparent in the market, we feel that people can really get hands-on experience and understanding of the investment that they're going into. And in doing so, we also focus, really on what we know best, and that is underwriting these transactions, leveraging our connections through the brand and our experience through the brand, to really focus on the product first. We're not an aggregator platform. We're not a technology company. We are a real estate company that focuses on the product and the transaction before and front the capital before we syndicate out.
Okay, so actually speaking of leveraging the brand, can you tell us a little bit more about ArborCrowd's proprietary real estate network that's offered through the Arbor family of companies?
Sure. So, Arbor Realty Trust is a publicly traded real estate investment trust that's been around for a while now. And they've been successful. They've survived and thrived in the past market cycle and continue to do so today, even due to the unfortunate circumstances that exist. So what we identified with our platform that there were a lot of borrowers that came to the REIT looking for debt, and they often needed to close the equity gap in their transactions in the $2 to $6 million range, that they could either go to family and friends or a high net worth investor or a family office for, and oftentimes they struggle to do so. So we created the platform to solve for that gap in the capital stack. And in doing so, we're dealing with sophisticated borrowers that Arbor Realty Trust has had relationships with for many, many years. And we're able to cherry pick those deals that come through to us, underwrite them to our standards, and see if they pass our tests and go through our models to meet the threshold for an affiliate of ours to literally fund the capital.
Okay. And kind of to follow up with something that's kind of affecting, all of us right now, the coronavirus outbreak has definitely impacted the real estate market. I've noticed that some platforms have actually begun limiting investor withdrawal requests. I would like to ask how ArborCrowd is faring during this time, and what measures are you taking to kind of protect your investors' interests right now?
So, one of the things of how we are so selective with our deals, of why, and in our built in our model of one deal at a time, is that we perform rigorous underwriting, and based on experience, we only present what we feel are the best opportunities on our platform, and we have time and patience. We are not under the same duress of showing growth that other companies have to show to their venture capital firms behind them or their partners behind them. So that affords us the ability to be incredibly selective. We were coming before COVID in a market where there was the longest upcycle in history, and competition was very intense. And when you have people who are, looking to compete on deals tooth and nail and pay above sticker and a tremendous amount, ultimately you decrease value. So with our model, we were slow and steady and patient and stuck to our core into finding what deals we think fundamentally will perform and will perform in an impending downturn. Obviously, no one could have predicted one like this that could come. So with that said, the fundamentals of our deal we feel are very strong and are performing today. One of the things that we did in the COVID pandemic was negotiate an exit from one of our deals just a year into it. As asset managers in our deals, we're not just an aggregator platform. We are invested. We are asset managing on behalf of the crowd. And based on our experience, we're able to go to the table with our general partners and say, hey, this deal, this climate, this business plan pivot no longer makes sense. And we'd like to see if there's an opportunity for us to negotiate an exit. And we did so in just 12 months of entering the transactions. It's something we pride ourselves on being able to do. And that points to a lot of our experience. So our deals are performing. Obviously nobody can say what will happen and how long this can last, but to date, we feel confident with the fundamentals of our deals when we chose them and how they're doing today. We pivot when we need to, we act when we need to. And your question as it relates to what other people are doing in terms of redemption really just points to what I was saying earlier when, people market a lot of different things and they bring people in with their understanding, right? Especially a non-accredited, a true retail investor, right? Who has no prior experience investing in commercial real estate, followed an advertisement to your platform, right? Thinks that they have the ability to redeem their capital when they need it. And liquidity is important to everybody right now, right? And when you no longer offer those redemptions or basically make it so that it's impossible or there's such a steep price point, that's false advertising. That's dishonest. And a lot of platforms are doing that. Investors are not able to take out their capital when they were offered the ability to do so. And it just shows you when the time gets tough, it's just not really there. And that's unfortunate.
Well, Adam, thank you so much for taking the time to chat today. It was wonderful to connect with you and to learn more about ArborCrowd. Yeah, thanks so much for taking the time.
Yeah, thanks for having me.